November 2025. We essentially, stocks were saved mid-session. We were really looking quite grim there mid-session in the S&P, Dow, Nasdaq, and Russell until Chuck Schumer came out, who's the leader of the minority. Leader the minority government or minority leader. They said that they could rapidly reopen if the Republicans accepted their conditions. Trump's always also said that they will probably come to a deal in the next week. I mean, look, we're still at a record length of shutdown here at the moment, so I think and we're seeing, as I said, the air traffic controllers now not being able to do their jobs. So the airspace is shutting down, which is going to hurt the travel industry, particularly leading into Thanksgiving. Michigan Consumer Sentiment Index dropped to its lowest level since June 2022. And what that was around was worries around inflation, worries around job security due to government dysfunction. So reports from private firms also complicated the labour picture. Layoffs in October, which is something I was talking about last Friday, were at basically record highs or thereabouts since sort of COVID. But now economists are very divided over whether we're going to get too many more rate cuts, and that's to do with the fact that the Fed really can't make major decisions unless they're getting economic data, I suppose. So, that government dysfunction really hurting the US economy at the moment in many ways, and I think those concerns will probably continue to flow into the market. Look, we haven't had any shortage of fundamental reasons to be pessimistic around this market. Valuations have stacked up, the government debt, tariffs, etc. Like, there is a million fundamental reasons. And as I said in the last couple of morning calls, is that what I'm really watching here is the only thing that's really underpinned this rally has been the technical momentum. And in the S&P and the Nasdaq, we've seen the first daily signals on the sell, strong signal for the Russell on a sell, and then neutral for the Dow, neutral for the Euro stocks. Aussie market in strong sell on both, turned sour a little bit before. Some of these Asian indexes still showing strong buys, but I mean, overall, they haven't rallied anywhere near as far as what that US market has. There's concerns about Oracle's debt in the AI sector. There's concerns around valuations, but as I said, this technical momentum here turning into sell territory, and for the week, the main indexes in the US ending up down like this, and these small gains are not going to, the small gains of the Dow 0.16, S&P 0.1, and the Nasdaq was actually down 0.28, is not really going to help those technicals. So, as we roll over and those signals turn to strong, that's where you start to be a little bit concerned, because it really was the only thing that's underpinning those things. And we really do need to pay attention to that, because there is nothing from the fundamental side that's going to save this market. And even with I think there was a $2,000 tariff dividend, I suppose, that Trump's announced, because obviously he's dropping in the polls because of this government shutdown, to increase a bit of popularity. I mean, that bit of fiscal stimulus, in a way, almost takes rate cuts off the table as well, because you're getting fiscal stimulus, which is going to muck around with the stimulus. And not to mention the fact that we're probably quite a few months away from the Supreme Court ruling on his tariffs. But if he goes and pays out these dividends, and then he's not going to be able to get that money back, and then he's going to have to pay back if they rule against him. He's going to have to pay back that money. It's a disaster for the federal budget. So we overall we need to keep watching those technicals very closely, because things like things like private credit, things like the valuations, the softening. Well, it's anecdotal, but the softening of the employment numbers, etc. they're not going to help, and they'll be laser focused on those things once the um, once the market turns. So we've seen fairly broad strength here, but not so much in the major part of the market. So when I say here, the financials or the broader market, the non-tech and non-mag, Mag 7 or mega caps part of the market was obviously the ones that headed higher on and saved the market a little bit. We had Tesla down because there is that they approved that landmark compensation plan for Tesla. I suppose people bring in a little bit of key risk into that. Semis were a little bit lower. There was no major news. I think it's just that the froth's starting to come out of those things a little bit now that earnings are out of the way. There's Airbnb was about flat. They had earnings. It gave up gains, but they were upbeat on forecast. Buy now, pay later provider reported Affirm Holdings, that is, results that significantly exceeded expectations. I think that's great for the company, but I think that's a massive red flag for the economy. Take-Two Interactive, which Rockstar Games, which is Grand Theft Auto, one of the largest media releases of all time. They've delayed yet again. It'd be up to a year. Second delay, they fell 8%. DraftKings was up, and Peloton Interactive was up. One's a gambling business. They lowered their full-year sales, but their outlook they pushed high. But obviously they were already beaten down, and then Peloton smashed on earnings as well. There were some fairly small ones overall. And in terms of commodities this week, we got gold and silver basically finished flat for the week. Uranium stabilised up 1.4%, but still down about 13% for the week. Copper was down 3% for the week. Platinum down 1.6%. Iron ore down 4%. But look, overall, I mean, Bitcoin made a bit of a bounce back as well, up 4% on the day, but still down 5% for the week. But there's not much going on here in these. I would imagine the resolution of a government shutdown is going to be fairly positive for a few of these things overall. But yeah, we're at this point in time, it's really more of the same. I'll be watching those technicals very, very closely, and we're looking for updates on the resolution of this government shutdown. But if it stalls, that's not going to be good. But I can see that the negative news stories combined with the technicals are starting to snowball and gain momentum a little bit for the market. So again, we're increasingly sort of going back to cash at the moment. And we just think cash is very valuable, basically, because if we do have a short, sharp, and they generally are short, sharp moves when we fall these days, the stats for the last decade or 15 years show that things go down very quickly and recover very quickly. That cash is super valuable to be buying, those high conviction names that you really want, as opposed to buying up here at these record highs, or very close to these record highs. So yeah, they're probably what we're looking out for, overall for the week. But I don't expect too much out of this week. It feels like it'll be a fairly quiet week. And we'll be more focused on price action than generally than events or earnings. You'll have to be watching sort of very closely, and like I said, taking some risk off the table. At the end of the day, at these levels, you've benefited from one of the best 3-year rallies in recent memory, certainly in my career, 30 odd years. So there's no shame in taking some money off the table up here. It's very sensible. And I don't think you're going to miss out on anything major to the upside. So you sort of probably don't want to look a gift horse in the mouth, and then look at the value of that cash. Make sure you pull together your watch lists and the things that you really want to buy for the next couple of years, or the next year or so, and then and sort of choose where you want to buy those, and getting organised like that will benefit you majorly coming into any form of volatility overall. So So yeah, but pretty boring this morning. I won't bore you for too much longer. Have a great day. Make sure you're reviewing those portfolios, and